Hey everyone, and welcome to the deep dive. Today we're diving into forex trading styles, like finding the right tool for a specific job. We've got this really great resource on forex trading strategies. So get ready to learn some cool stuff about different approaches, and maybe find one that speaks to you. Because there's no one size fits all in forex trading, right?
Absolutely not. It's really interesting how trading styles are really as diverse as personalities are. What works for one person, one trader could be, a disaster for another.
Yeah, for sure. But before we get into all the different styles, let's define what a trading style even is,
Hmm.
because people sometimes get it confused with like a trading strategy,
Yeah.
but it's bigger than that, right?
Right. It's a much broader philosophy. So, think about a trading strategy as like a set of rules. It tells you when to buy, when to sell. Your trading style is more how you approach the market. It dictates, things like your preferred time commitment, how often you're trading, how long you're holding positions, things like that.
So it's kind of like the overall game plan, the guiding principle behind all your decisions, and I'm guessing your personality plays a big role in determining what that style is.
Oh, it's critical. Imagine trying to force, a square peg into a round hole. That's what it's like trying to trade with a style that doesn't really fit your personality. You're going to be frustrated and it's probably going to lead to losses.
Yeah, I could see that, like trying to be a marathon runner when you're wired for like quick sprints. So let's get into some of these different paths, shall we? Our source starts with day trading, and just the name itself sounds pretty intense.
It is. It's all about speed, agility, and nerves of steel. Imagine having to make 10 trading decisions an hour, each with the potential to make or lose money. That's the kind of mental fortitude that you need for day trading. It's not for everyone.
Wow, that's a great way to put it. It's not definitely not for the faint of heart. So it sounds like you need to be glued to the charts, constantly analyzing
Right.
and making split-second decisions.
Yeah, you're exactly right. Day traders live and breathe the markets. They enter and exit all their trades within a single day. They're not holding anything overnight. They rely very heavily on technical analysis, using things like chart patterns and indicators to identify, fleeting opportunities.
It's like a hawk
Mm.
constantly scanning for any slight movement in the prey below.
Yeah.
So what kind of personality thrives in this kind of a high pressure environment?
Well, it's somebody who is comfortable with risk. They love that adrenaline rush and they can think clearly under pressure. Discipline, focus, and a strong understanding of technical analysis are all really important.
Okay, I think I'd need a lot of calming tea before I even attempt that one.
Yeah.
So let's switch gears a little bit to something that sounds a bit more my speed, which is swing trading. If day trading is like sprinting, this is more like the marathon, right? What's the key difference here?
So swing trading is about capturing those bigger waves, the market swings that can last for several days or even weeks. Swing traders aren't really concerned with those minute by minute fluctuations that day traders really obsess over.
So it's about having that patience to ride out those trends, those bigger trends. But it still requires, a keen eye to identify those swings, right?
Absolutely. They rely on technical analysis, but they also incorporate fundamental analysis. So they might be using tools like, moving averages to help them spot trends, but they're also going to be looking at economic data and news events to kind of understand that bigger picture driving those trends.
So they're kind of like detectives, piecing together all those
Ah,
clues from different sources.
yeah.
So what kind of personality is drawn to swing trading?
Well, it's someone who is patient, disciplined,
Hmm.
and they enjoy in-depth analysis. They're comfortable with holding positions, for longer periods and trusting their judgment even when the market gets really noisy.
Okay, that definitely resonates more with me than the heart pumping world of day trading. But our source also mentions an even more extreme short term style, scalping. And I know a little bit about scalping, and it just sounds almost impossible to pull off consistently.
Yeah, you're right. It's incredibly challenging. It's like the Formula One racing of Forex trading, where, fractions of a second can make the difference between winning and losing. Scalpers are aiming to profit from tiny price movements, sometimes within seconds.
Wow, that's intense. Like I could barely, decide what I want for lunch in that amount of time, let alone, make a profitable trade. What does it take to be a successful scalper?
Well, they need lightning fast reflexes, unwavering focus, and a deep understanding of order book dynamics. They often use specific techniques like order book reading to kind of anticipate those tiny price shifts. It's not for the average trader, that's for sure.
You know, you mentioned nerves of steel before with day trading, but it feels like scalping takes it to a whole other level. I can't imagine the mental stamina that requires.
It's really remarkable. They're making, dozens, sometimes even hundreds of trades a day, each with razor-thin profit margins. It's a high-stakes, high-pressure game that demands, exceptional skills and an ironclad mindset.
Okay, I'm officially too relaxed for that style.
Sure.
Let's move on to something a little more hands-off. Our source mentions automated trading, and this sounds intriguing. Tell me more about, using algorithms to do the heavy lifting.
It's like having a robot trader working for you 24/7. You're pre-programming your strategy into an algorithm, and it's going to automatically execute those trades based on your predefined rules.
So you're taking the human element out of the equation.
Right.
But that must require some pretty serious tech skills, huh?
Well, it certainly helps to have some programming knowledge, but there are platforms out there that offer, user-friendly interfaces for building and deploying those automated trading systems. You still need to define the strategy and the parameters, but the algorithm handles the actual execution.
Interesting. So what are some of the advantages of going this route?
One of the biggest ones is removing emotions from the equation. Algorithms don't get scared, they don't get greedy, they don't get impulsive. They just execute the trades based on the logic that you've programmed.
Right. No more second guessing yourself or letting fear kind of take over. It sounds like a great way to achieve more discipline and consistency in your trading.
Exactly. And another advantage is that it frees up your time. You don't have to be glued to the screen all day. Once the algorithm's running, it can handle the trading while you focus on other things.
Okay, but I'm guessing there's some downsides as well that we should consider. It can't all be, sunshine and roses.
Of course. One potential risk is relying solely on historical data to build your algorithms. Markets are dynamic, and what worked in the past might not work in the future. So you still need to monitor and adjust your algorithms as needed.
So it's not a completely, set it and forget it type of scenario. You
Sure.
still need to be actively involved and adapting to the changing market conditions.
Absolutely. It's important to understand that automated trading is a tool. It's not a magic solution. It can be incredibly powerful when used correctly, but it still requires your expertise and oversight.
Okay, that's a great point. So we've explored 4 distinct paths here: day trading, swing trading, scalping, and automated trading. Each one seems to, appeal to a different personality type.
Yeah.
And they require a specific skill set and mindset.
Right. And this brings us to a crucial concept that kind of underlies all of these trading styles, time frames.
Okay, I'm intrigued. How do time frames fit into this puzzle?
Well, time frames are the lens through which you view the market. They dictate the frequency of your trades, how long you hold positions, and the types of opportunities that you're looking for.
So we're talking about minutes, hours, days, weeks.
It's a whole spectrum. Day traders, they typically use very short time frames, like 1-minute or 5-minute charts, because they're looking for those rapid price fluctuations to capitalize on.
Right, so they can see those quick movements to make those split-second decisions. What about swing traders? What kind of time frames are they looking at?
Swing traders, they might use hourly or daily charts because they're looking for those larger swings that develop over days or weeks. They're not as concerned with that minute-by-minute noise that day traders are so focused on.
So the time frame basically sets the pace for your training activity.
Exactly. It's like choosing a tempo for a song, a fast tempo for an energetic track, a slower tempo for a more mellow vibe.
I like that analogy. It helps to visualize how time frames can really influence, the rhythm of your trading.
And it's important to choose a time frame that aligns with your trading style and personality. A day trader using daily charts would be like trying to dance a waltz to a techno beat. It's just not going to work.
Okay, so we've established that time frames are a key element in Forex trading, and they tie in directly with the trading style that you choose. But how do you actually figure out what style is the best fit for you? That seems like the most important question for anyone starting their Forex journey.
It is the question that everyone wants answered. But unfortunately, there's no magic formula. It's a process of self-discovery, research, and experimentation.
So it's about trying out different approaches, seeing what feels natural, and being honest with yourself about
Yeah.
what you enjoy and what you're good at.
Exactly. It's also about understanding the why behind a particular style.
Mhm.
Why do day traders do what they do? What drives swing traders? What makes scalpers tick? The deeper you understand those underlying principles, the more confident and consistent you'll become as a trader.
That makes a lot of sense. Just blindly following someone else's strategy without really understanding
Mhm.
it is probably not going to lead to success. You really need to own your trading style. But is there anything else that's important to consider when making this decision?
There is, and it's something that goes beyond, the typical textbook approach to Forex trading, and that is, it's the idea that successful trading is not about conquering the market. It's about building a relationship with it.
Now that's an interesting perspective. Tell me more.
The market is like a living, breathing entity with its own rhythms and patterns. It's constantly moving, evolving, reacting. And successful traders, they don't try to impose their will on the market. They learn to listen to it, to read its signals, and to anticipate its movements.
So it's more of a dance than a battle.
Exactly. It's about finding that harmony with the market's flow,
Hmm.
respecting its power and adapting to its ever-changing dynamics.
I love that analogy. It
Yeah.
really shifts the perspective from trying to beat the market to really working with it.
And this brings us to another crucial element that often gets overlooked, and that's the psychological side of trading.
The mental game. I've heard that's just as important as technical skills, if not more so.
It absolutely is. You can have the best trading strategy in the world, but if you're not mentally prepared to handle the ups and downs of the market, you're setting yourself up for failure.
So it's about managing your emotions, controlling your impulses, and staying disciplined even when things get really tough.
Exactly. Emotions like fear, greed, and overconfidence can sabotage even the most experienced traders. Learning to manage those emotions and cultivating a winning mindset is essential for long-term success.
Wow, we've covered a lot of ground here, from the adrenaline-fueled world of day trading to the more laid-back approach of swing trading, and
Mhm.
from the importance of time frames to the often overlooked psychological side of trading. This has been an incredible start to our quest for the perfect Forex trading style.
It's been a fascinating exploration, and I think it's clear that there's no single best trading style. The key is to find the one that aligns with your personality, your goals, and your risk tolerance.
Couldn't agree more. And as we wrap up part one, this deep dive, I want to encourage you to reflect on what's resonated with you so far. What style has piqued your interest? What kind of trader do you envision yourself becoming?
Take some time to ponder those questions. In part two, we'll delve deeper into the nuances of each style, and we'll explore, practical tips to help you identify the one that might be your perfect match. Stay tuned.
Welcome back to the deep dive. In part one, we started exploring the fascinating world of Forex trading styles, those distinct paths that traders can take to navigate the market. Each one has its own rhythm, its own, set of challenges and rewards.
Yeah, it's like choosing a musical instrument to play. Some people are drawn to the fast-paced energy of the drums, while others might prefer the soulful melodies of the saxophone. It's all about, finding the instrument that resonates with your soul, the one that allows you to really express yourself fully.
I love that analogy. It really captures,
Yeah.
the essence of finding that trading style that's really aligned with who you are. So let's continue our exploration. Part one, we got a taste of day trading. It's fast, it's furious, it's definitely not for everyone. What are some of the key characteristics that define this high octane style?
Well, day trading is like being the chess player, constantly making moves, thinking several steps ahead, and adapting to the opponent's strategy. Day traders, they thrive in that rapid fire environment where decisions need to be made in a split second. They're masters of technical analysis, using charts, patterns, and indicators to spot those fleeting opportunities.
It's like they have this sixth sense for market movements. They see things that most people miss. But it's not just about speed, is it? You need a solid foundation in technical analysis to even identify those opportunities in the first place.
Oh, absolutely. Day traders need to be fluent in the language of charts. They need to understand, candlestick patterns, moving averages, support and resistance levels. They're constantly scanning for those subtle signals that indicate, a potential price move.
So it's like being a detective, but instead of searching for clues at a crime scene, they're looking for clues in the charts. And speaking of clues, our source mentioned that day traders often focus on specific trading sessions. Can you elaborate on that?
Certainly, the Forex market is open to 45, but different trading sessions have different levels of activity and volatility. The London session, for example, is known for its high liquidity and fast-paced price movements, making it a favorite for many day traders.
So it's about finding that session that aligns with your preferred rhythm and risk tolerance. Some people might prefer the calmer waters of the Asian session, while others might thrive in the choppy seas of the London session.
Precisely. It's about finding that market environment that really suits your trading style.
Okay, let's shift gears a little bit from the sprinter to the marathon runner. Let's talk about swing trading. What makes this style distinct from the rapid fire world of day trading? If day trading is about capturing those fleeting moments, swing trading is more about riding those waves, those longer term trends that can play out over days or even weeks. It requires a different kind of mindset, doesn't it?
Absolutely. Swing traders are like surfers waiting for the perfect wave. They're patient, they're disciplined, and they're not afraid to ride out those dips and the choppiness. They know that the bigger reward lies in catching that long, smooth ride.
So they're looking for those sweet spots,
Yeah.
where they can enter the market, ride the momentum, and exit for a profit. But it's not just about intuition, right? They still need a solid strategy to identify those swings.
Of course. Swing traders, they rely on a combination of technical and fundamental analysis. So they might be using technical indicators like moving averages to help them spot trends, but they're also considering, economic data, news events, and even geopolitical factors that can influence those trends.
So they're a bit more like investigative journalists.
Yeah.
Digging deeper to understand the forces driving those market movements. It's not just about looking at charts. It's about understanding the bigger picture.
Exactly. They understand that market swings are often driven by fundamental factors, not just random price fluctuations. They're looking for those confluence points where technical analysis and fundamental analysis align.
Now I want to circle back to something we touched on in part one, the importance of aligning your trading style with your personality. We've talked about the different characteristics of day traders and swing traders.
Yeah.
But how does someone actually figure out which style might be the best fit for them?
That's a question that many traders grapple with. It's a process of self-discovery, research, and experimentation. It's like finding your favorite genre of music. You might start with rock, then explore jazz, then dabble in classical, until you finally discover that blues music speaks to your soul.
Oh, I love that. So it's not just about blindly following a style because someone else said, it's good. It's about trying different approaches, seeing what feels natural, and being honest with yourself about, what you enjoy and what you're good at.
Precisely. It's about understanding your strengths, your weaknesses, and your risk tolerance. Are you comfortable with high risk, high reward scenarios, or do you prefer a more conservative approach? Do you thrive in those fast-paced environments, or do you prefer a more measured and thoughtful pace?
Those are all great questions to ask yourself.
Yeah.
It's like finding the right pair of shoes, right? You wouldn't buy a pair of stilettos if you're planning to hike a mountain.
Yeah.
You need shoes that fit your purpose and your terrain.
Exactly. And trading is no different. You need to find a style that fits your personality or your lifestyle and your goals.
Now let's talk about the elephant in the room. Trading psychology. We touched on this briefly in part one, but it deserves a deeper dive. You can have the best trading strategy in the world, but if you're not mentally prepared to handle those challenges of the market, you're setting yourself up for failure.
Yeah. It's absolutely true. Trading psychology is often that overlooked piece of the puzzle. You see, the market is designed to to exploit our emotional weaknesses. It triggers our fear, our greed, our hope, our despair. It's a roller coaster of emotions that can derail even the most skilled traders.
So it's not just about knowing when to buy and sell. It's about managing your emotions, controlling your impulses, and staying disciplined even when the market is testing your every nerve.
Exactly. It's about recognizing those emotional triggers, understanding how they impact your decision making, and developing strategies to mitigate those negative influences. It's about cultivating that winning mindset that allows you to stay calm, focused, and objective, even in the face of market volatility.
I'm guessing this is where things like mindfulness, meditation, and journaling can come into play.
Absolutely. Those practices can be incredibly helpful in developing self-awareness and emotional regulation,
Yeah.
which are essential for successful trading. It's about understanding your own patterns, your tendencies, your reactions. The more you know yourself, the better equipped you'll be to navigate that emotional minefield of the market.
It's like having that internal compass that guides you through the storms and keeps you on course. Now, you mentioned earlier that successful trading is not about conquering the market, but about building a relationship with it. Can you expand on that a little bit?
The market is not your enemy. It's not something that you need to defeat. It's a force of nature, like the ocean or the wind. And successful traders, they learn to respect that force, to understand its rhythms and patterns, and to adapt to its ever-changing moods.
It's more about working with the market, flowing with it,
Right.
rather than trying to force it to do your bidding.
Exactly. It's about recognizing that you're not in control. You're simply participating in a larger system, and your success depends on your ability to adapt to that system, to read its signals, and to anticipate its movements.
It's like being a sailor, navigating the open sea. You can't control the wind, but you can adjust your sails and use its power to reach your destination.
Beautifully put. And just like a sailor needs to constantly monitor, the weather, the currents, and the wind. A trader needs to constantly monitor the market, the news, and the economic indicators. It's about being aware, being adaptable, and being ready to adjust your course as needed.
Okay, we've explored the characteristics of day trading and swing trading. We've delved into the crucial role of trading psychology, and we've touched on the importance of aligning your trading style with your personality and building that relationship with the market. What other key insights can you share to help our listeners on their quest to find their perfect trading style?
Well, one of the most important things is to be patient. Discovering your trading style is not a quick fix. It's a journey. It's a process of exploration, experimentation, and self-discovery.
So it's not about finding the holy grail of trading strategies or trying to become a millionaire overnight. It's about taking the time to learn, to grow, to evolve as a trader.
Exactly. It's about enjoying the process, the challenge, the learning curve. It's about celebrating those small wins, learning from the losses, and constantly striving to improve your skills.
It's about treating trading as a craft, a skill that you hone over time with dedication and passion.
Precisely. And remember, there's no shame in asking for help. Connect with other traders, join online communities, find a mentor. There's a wealth of knowledge and support out there. You don't have to go through this journey alone.
That's great advice. It's like anything in life, the more you connect with others, the more you learn and grow.
Mhm.
Now, as we wrap up part two of this deep dive, what's the key takeaway you want to leave our listeners with?
Discovering your ideal trading style is a process of self-discovery. It's about understanding who you are as a trader, what your strengths and weaknesses are, what motivates you, and what kind of trading environment you thrive in.
It's about finding that unique approach that allows you to express your individual trading voice in the market.
Exactly. So take the time to reflect on what you've learned, explore different resources, and most importantly, trust your intuition. The market is vast and diverse, offering opportunities for every kind of trader. The key is to find your place within it.
And on that note, we'll wrap up part 2 of this deep dive. In part 3, we'll put all these insights into action and provide you with a roadmap to help you define, your perfect trading style. Stay tuned. Welcome back to the final part of our deep dive into Forex trading styles. It's been quite a journey so far, exploring these different paths that traders can take to navigate the market. We've talked about that adrenaline rush of day trading, the patient approach of swing trading and everything in between.
Yeah, and we've delved into the often overlooked, psychological side of trading, emphasizing that mastering your mindset is just as crucial as any technical skill.
Right? It's like having a powerful engine in your car, but if your steering wheel is broken, you're not going to get very far. So now let's bring all these insights together and equip you with a roadmap to help you define your perfect Forex trading style. Are you ready to chart your course?
Absolutely. Let's empower our listeners to take control of their trading journey and set sail towards success.
Okay, first things first. We need to tap into your inner explorer, that curious part of you that's eager to learn and discover. Remember, finding your trading style is a process of self-discovery.
It's about understanding, your strengths, your weaknesses, your risk tolerance, and what truly motivates you.
It's about being honest with yourself and recognizing that there's no shame in admitting that a particular style doesn't resonate with you. We've all been there.
Exactly. It's like trying on different hats. Some might look good on you, some might not. The key is to keep trying until you find the one that fits perfectly.
So how do we start this process of self-discovery? Where do we even begin?
One of the most effective ways is to simply ask yourself some key questions. What are your financial goals? How much time can you realistically dedicate to trading? What level of risk are you comfortable with?
Those are great starting points. It's about getting clear on your priorities and what you're hoping to achieve through trading. Are you looking for a side hustle, a full-time career, or simply a way to grow your savings?
Exactly. And once you have a better understanding of your goals and constraints, you can start exploring, different trading styles in more depth. Remember, we've only scratched the surface here. There's a wealth of information available online, in books, and in courses, even in other podcasts.
Don't be afraid to dive deep into those resources. Soak up the knowledge and connect with other traders. It's like joining a community of explorers.
Yeah.
Sharing stories, tips, and insights.
And as you're exploring, pay attention to what sparks your interest, what styles make intuitive sense to you, what strategies resonate with your personality.
It's like that feeling you get when you stumble upon a hidden gem, a book that captivates you from the first page, or a song that moves you deeply. It's that feeling of this is it. This is for me.
Exactly. Trust your gut feeling. It's often a good indicator of what aligns with your natural inclinations. Now, once you've narrowed down your choices and you're feeling a strong connection to a particular style, it's time to put it to the test.
Okay, so we're talking about back testing here, right?
Yeah.
It might not be the most exciting part of trading, but it's essential for validating your chosen style and fine-tuning your strategy.
Absolutely. Backtesting is like taking your trading strategy for a test drive before hitting the open road. You're using historical data to simulate trades and see how your strategy would have performed in the past.
So you can identify any potential weaknesses, refine your entry and exit points.
Yeah.
And gain confidence in your approach before risking real money.
Precisely. It's a way to gather evidence and build a case for your chosen trading style.
Now even after you've chosen style and developed a strategy, the journey doesn't end there, does it? The market is like a constantly shifting landscape, throwing curveballs and changing its tune.
That's the beauty and the challenge of Forex trading. It's a dynamic and ever-evolving environment that requires constant adaptation and learning.
So successful traders are not just skilled technicians. They're also they're also lifelong learners, always curious, always seeking to expand their knowledge and refine their approach.
Exactly. They embrace change. They're open to new ideas, and they're constantly tweaking their strategies to adapt to the ever-shifting market dynamics.
It's like being a gardener tending to their plants,
Mm.
nurturing them, pruning them, and making sure they have, the right conditions to thrive.
What a wonderful analogy. And just like a gardener learns from each season, observing, what works and what doesn't, a trader learns from each trade, analyzing their successes and their failures.
So as you gain experience and confidence, don't be afraid to experiment, to try out different variations of your chosen style, and to see what works best for you in different market conditions.
That's the exciting part. It's about finding your own unique rhythm within the market, your own personal way of dancing with the price movements.
And remember, the most important factor in determining your success is not the style you choose, but your commitment to learning, adapting, and evolving as a trader.
Beautifully said. And as we wrap up this deep dive, I want to leave you with this final thought. Discovering your trading style is like finding your voice in the market. It takes time, experimentation, and self-discovery, but the rewards can be truly substantial.
It's about finding that unique approach that allows you to navigate the complexities of the market with confidence, clarity, and a sense of purpose.
So go out there, explore, experiment, and most importantly, enjoy the journey. The world of Forex trading is full of possibilities waiting to be uncovered.
That's it for this deep dive, folks. We hope you found this exploration of Forex trading styles insightful and empowering. Until next time, keep those knowledge-seeking spirits high and happy trading.